on. So we're going to go through the indice pairs today. Hopefully I'll be able to get through all of them in this video. So let's just go through the DXY first. Obviously, for simplicity reasons, we are just looking for shorts. So what we're doing here is we're basically looking at this whole range here, and we're basically trying to establish if we get a continuation to move lower into the first target area, which would be around about here. So what we'll be doing is be waiting patiently for a continuation to form. It could look something like this, or it could be a little bit more concise within that, but essentially that's what we're going to be looking at. If we don't get that, then obviously we will be looking for continuation within it. So it could be something like this, but the thing about something like that is that can still develop and come back up there and then give us continuation and still move lower. So if this fails, we'll probably get a clue in there where we can then trade it into one of those areas there and then wait for that insurance entry, get positioned in here and then play it short. I will probably be waiting for something more developed, only because of where it's positioned. As you can see, it's somewhat in the middle of this overall range. And because it's in the middle of that range, I don't want to be just jumping into anything ordinary. I do want to wait for something a little bit weighted, something that kind of gives me the most optimal protection and better structural confirmation. So I will be waiting patiently to see how this forms, and then if we do start to make our way back up here, then we can start establishing, you know, how that's formed, what it's trading into, how we can get positioned with stops above and then trade into there with optimal risk reward and then take advantage of that overall sequence. So that's basically the trade idea of the DXY. Of course, we do understand as well that we could smash through this, create more continuation and continue lower. So then the sequence actually becomes a lot larger, and that's what we're really looking for. Based on the weight of this move here could be pretty impulsive. So we can just wait and see how that evolves. In the case that we don't get that, and then this does evolve against us and we start moving, what I would be doing is I'd be boxing that off and then wait to see if we do get further continuation above, showing a failure of this area here, and then this becomes the continuation, and then we can then play that to the upside to then refill those areas or potentially move even further. So that's basically the whole trade idea there. Obviously we are looking at it on the 1 hour. If I do zoom out for a second and just clear this chart off just ever so slightly, what we can see here on the daily is we are within this area here. So doesn't necessarily need to show full commitment, but a continuation would support the trade idea and give us better optimal risk reward, and we'd be protected with a structure which then actually accumulates enough volume for us to get the next leg to the downside, as we can see here, where, you know, we've essentially seen price tap into these areas, reject, give us continuation, move, and then hovered sidewards for a bit and then sold off, tapped into those lows, came back up, re-tapped into those areas, did leave a bit of a gap up here as well. So that's a reason why we would be quite neutral on this. And then essentially with that volume in place, we could potentially see this now move to the downside and take advantage of that sequence there. So that's basically what we're looking at. And we are still taking advantage of this because we've tapped into that, we've rejected, and now we're following through. That continuation would be quite high probability as well if we did get it. It's just bearing in mind that, you know, this is overall quite corrective right now. It's a bit of a squeeze, so this can still develop into something a little bit more messy and make its way back up here. So that's basically it for the DXY. What then I'll be looking at on the JP225. JP225 as well has been looking quite bullish, and I'm not really surprised on how price is moving and how it's just continuing to the upside. What I do want to see is similar price action to what we're seeing in this corrective channel. So even though price is moving in this direction, it's not very sustainable to be moving like that forever because it is corrective. So what we do want to see is either two things: that we can still take advantage of the longs. So if we come back up here, we come back down, and then we get something a little bit more developed, we can then get positioned in there to go long. How long it goes long is untold right now. Obviously we don't know. This can still develop into quite a lot of things, and more likely as well, this could potentially become something a little bit larger. So we have to also bear that in mind, that this could still become a part of its large piece of price action to then commit to the next leg up. So we can bear that in mind as well when we are looking at positioning. S&P 500. S&P 500 is quite stunning because, as we understood, if you were looking at the previous videos, and perhaps maybe you can go back in time, around about here in March 25, we tapped into those lows, and then we had a strong buy And you have to bear in mind that it's not just CFDs buying as well, you've got bigger term investments and so forth. So a lot of people are looking for these key areas to be tapped into. Once it was tapped into, we started to move, broke the high, and we just continued moving higher. This is very typical of the S&P 500. So what I am going to be looking at over here is now I'm just going to be looking for further continuation to then play that long and then just keep playing within that overall trend. There is the chance that we do take a little bit of a sell-off as well. So I would be keeping an eye on this, where price does hover and then eventually just makes a sharp dip and then comes back up and recovers and then still overall continues in that linear line. So that's something that I'm bearing in mind. US 100, so similar trade idea. Of course, we can see that, you know, we did pretty much the same thing. So I would be looking at the same similar sort of price action in here, where I would be looking to go long. US 30 likewise. US 30 can be a little bit more aggressive on the shorts as well. So, you know, whilst we're anticipating something like this on the S&P and the US 100, we might see some sort of sharper sell-off where something like that is possible as well, and then we don't get something so clean. That's something that I'll also be bearing. As we move on, Aussie 200. So Aussie 200 as well, I think, is pretty interesting because you can see how all these indices are pretty much moving in the same direction. What we can see here is that this is pretty much a failed continuation here. So it coming back up here and then maybe even developing into something further, maybe not even tapping into the all-time high as well. That could be an interesting part to it, where then this becomes a bit more of something like that and then eventually comes down and then we go and then it's overall a trade like that. That could pretty much work pretty well, and then retesting the back end of this area where we spike and then we get some entries to continue. That would be pretty decent, but that's trading into 2026. Obviously this is on the daily, so if I go down to the 4 hour, what we can see here is that we had the start off a continuation, but the size was pretty much the clue. So what we did see here was this was pretty much the base. We had this was the all-time high, and from the all-time high we sold off. We then created this level here. We failed to continue multiple times. So we had the 1, 2, 3. We then came up for the 4th. We sold, we failed again, and now we're just moving higher. So the clues were always there that this was just not ready to go. And again, if this starts to develop now, I would still be a bit cautious, because if we get something which becomes a little bit larger as well, it's a large continuation to a large continuation. So even something like this could fail and then come back down, and then this becomes a bit more corrective, becomes like that, and then makes its way back down here for us to get insurance entry to go long. And that's something that I would be looking at as well. Again, like I said, it needs a bit of time to develop. If you are looking at taking a trade on this, you know, a long's not really necessarily the worst trade idea. It's just you have to understand literally now that it's beyond its point of where we would look for that continuation. A continuation here would be still good. It's just that can still develop into something a little bit more messy, and you have to take that as part of what the market trading conditions are. So if you got something like that, I don't think that's the worst trade in the world. I think that's still pretty good, because some people would be looking for some sort of a reversal, but coming off the bat of all of that volume, I don't really necessarily think that that is the trade. I think we are still aiming to go back towards that all-time high and further. So I will be keeping that high in mind and then just waiting clearly for this. And then if we got something like that off the back of this failed continuation, which is basically accumulation of volume, we can then see that as positioning to then go to the upside and take advantage of that. So that would be pretty interesting. And Germany 40, do you know what, Germany 40 as well, same trade idea. If I just stay on the 4 hour for a second, or actually let me just start with the daily. And what you can see here on the daily is same trading situation as we saw with the other indices, especially the S&P. Price spiked up, but then we stayed within this range. So there was the trade idea that, you know, we basically accumulate here, we fill the range and then eventually go higher. We didn't quite get that. Now it's becoming more of an angled move, where it's starting to look something like this. So with the with the DAX, we know that this can be quite a aggressively impulsive pair, especially that I've spent a lot of years trading this pair. There's a bit of a clue here as well why this continuation wasn't really the one, because what we did see is we had this low, we took out this low, this became the base, and then we came up, but we didn't come back down to create a second base. Not that it's necessarily always the case, but it's because we equaled with this level and then we failed in that area. So during that failure, we can then see that on the 4 hour, you wouldn't have necessarily just wanted to jump into a trade here because it would still be quite reckless. You would have wanted to wait to see some sort of follow through and a continuation to confirm that was more than enough. But even so, it didn't really break that high. It just kind of equaled to it. And then as it failed, it then tried again, wicked, didn't quite get the commitment. Again, we would have still been waiting for that insurance entry down below that to invalidate the idea of a continuation. And then what happened was it just pushed and continued to the upside. So with that aggression in mind, you know, we could still be looking for continuation. But as I said with the US 30 as well, we could see some messier price action. So we have to be conscious of that. I would be interested in seeing if we did get something like that and then we pushed higher and we broke all-time highs and then we came back in and we started getting sells. That sequence there would be a pretty interesting one to play. So that's something that I will be looking at. UK 100. UK 100 is also one that's just pretty much shot up, and these are not necessarily the best areas to trade in. So you can see here that again we had a similar situation where we failed to sell off, we equaled to that low, we actually created a second bottom and we failed to just continue. Then we filled that all-time high. Even at this point here, that was a trap because we didn't equal or even break through the all-time high there, we left the gap. So that failed and then it just pushed through. So now where we're positioned is quite good because when you do look at it, you do technically, you're trading above this. So we are in the next area, but we haven't established the high of this range. So the high of this range can still develop, but what I would be looking at over here is I would be looking to wait for a base or even something like this where price hovers and then eventually comes in, even retests this whole area here would be interesting. And then we have that continuation and we can take advantage of that and then play the next move to the upside. If we had something like that, that would be great. On the other hand, we can't neglect the fact that even though we're within this squeeze, this can still sell off. So we might see something where this becomes a higher risk trade. And then we would basically wait for price to then develop, comes back down and trades in these areas. We then have potentially this range to play, so we could take advantage of this into that area there, keeping that in mind as the inflection point, and then basically trade it into that low. And that would still be a pretty decent trade because this would be lower risk. So you can see how trading in these areas are high risk, and the reason why I'm just pointing that out to be high risk is because of where it's positioned. So the positioning is extremely important because even though you get something like that, that can still develop and then become something like this. And then next thing you know, you were trying to get involved there. This developed into something of itself. You tried to get involved again there, which wasn't the worst trade in the world. But then again, you missed the fact that this was just developing into another continuation to move higher. So then this became one piece of its own. That was one piece of its own, one piece of its own, and so forth. And then this became one piece of its own. And then you can see overall, it's just moving to the upside. So you want to pretty much establish that pattern separation and just be able to read through the price action and take advantage of something like this. HK50 is also a really nice pair to be trading. Obviously it respects structure quite well. We can see that it's very aggressive to the upside, and we have to ask ourselves, like, how much do people really want to see this go higher? And you can see from this commitment that it is correctively moving higher, but we do have a clear all-time, well, not all-time high, but we have a high to the left here, and then we have multiple highs coming up as well. So you have to ask yourselves, what are we going to be trading into and what are we respecting? You can see that multiple times we didn't respond to these little hook points, and I think it's very clear that most likely we're going to be coming all the way back up. So in terms of positioning, we're pretty good. I mean, even when you look at it on the weekly, I would say that this is very discounted. We're still within the middle of this overall price action. So we do need to be a bit more on the side of, okay, if we're getting positioned, we need to wait for something very clear. So I've dropped down to the 4 hour now, and if I just have a little look at how the trend is moving and just understand that it's corrective, that doesn't necessarily mean that price has to sell off at some point. It just means that the odds are, if you're getting positioned at the top of this, there's the odds that this just does sell off correctively, comes back down, meets with the low, and then eventually continues or moves in its corrective fashion, and then eventually has one impulsive candle to the upside. So that's something that I would bear in mind. I'm not going to be looking to just jump into any ordinary trade. Like if I get something small up here, I know that that could fail, that could come down a bit. It could even do this, and then, you know, even still continue, and we get a large flag. And then that basically becomes the volume accumulation to then continue higher, or that could potentially fail and then we do sell off. So, you know, again, it's something that I think does need a bit more development. Right now it is moving aggressively. As I go into the 1 hour, if you do look at the most recent price action, we are breaking highs. But what do we know about breaking highs? We know that usually when a high is broken, people start trying to buy it, and then it starts to sell off, and then it starts to create some sort of continuation, as we've seen here time and time again. You know, these highs, you can see we broke the high. We didn't move too far away, and then we came back down. We broke it again, we came back down, and then we broke it. We then broke quite significantly in terms of the same size we saw in these ones. And then what happened was let me just take that bit off. So as we broke that high, we came back, retested, and then we continued higher, and then we created its next bit of price action, which was here. So this bit of price action wasn't the cleanest, I'll be honest with you. It wasn't the best trade in the world. It was very difficult to decipher because that became your middle section, but your middle section was a part of your first high. So then it was like, is this just, you know, a very irregular price action in terms of a structure? And it was. And then what happened was, after we broke this, we came back, and now we've taken out the high, and we've taken out quite aggressively. So I don't think we're going to be coming back anytime soon, but I can't tell you that for certain. I think what the odds are is, obviously this was the retesting area. What we're probably going to see is some level of price action, create continuation, and then after, when it's ready, it'll go, and then that will be the trade. So that's something that I will be keeping in mind. I don't really trade a lot of these other ones, but if I just kind of scan through them, what we can see here is with the China 850, similar price action. We're breaking all-time highs. I wouldn't be surprised if, you know, we broke a bit higher, came up, and then we came back down, and then we did this, and then we just continued moving in that fashion, and then it just still became a part of that. Wouldn't be surprised with that at all. Euro 50 is actually pretty decent as well. It's a pair that I have traded occasionally at times, but right now we are at all-time highs. So we do need to bear in mind that a lot can really happen in these areas. What I do like about this is we came up very strong, we created accumulation, and then we're moving strong again. So I wouldn't be surprised if, you know, we did start coming up to these target areas or even further before we start seeing anything. So for that reason, I think, you know, positioning in terms of broken these areas, if we do get something a little bit more developed, not that it's completely necessary, but if we did get something, that'd be great. If not, you'd have to be cautious trading in these areas, because it can still come back, retest this area here before it continues going higher, which we've seen time and time again. France 40, similar thing. I mean, you know, we've got this high here. We've now pretty much had that push, this, that. I think France 40 is basically similar to what we saw on the EU 50 just now. We might just get some small continuations and just rapidly move to that area. So that could be one to definitely analyze a bit deeper. Italy 40, I think that needs a bit more development. You know, as we can see, it doesn't always give you the best piece of price action, but you can see here that price is correctively coming up to that area. We might see a sell-off and then back into those areas to then go long. So you could take advantage of that sequence and then pivot and then see if you can get long. NL25, it's decent, to be honest. You know, you've got this overall range right now. We've come up phase 1, phase 2, phase 3. It makes sense for this to push higher, so I'd wait for continuation and move. RTY, which is the US Russell, tricky one, but I'll be honest with you, like similar with what we're seeing across the board. I just think that sometimes this can have sharper sell-offs. So we are in this area here. If we break above and come back in, we could see some sells. I'm not sure if we're looking at deep sells just yet. I think we could just continuously rapidly move. So we have to be a bit more safer when trading that. And then if we look at the Singapore 25, I think in terms of longs, this is looking good. You know, you can see that we've actually just done what we need to do in these areas now, so we're just rapidly moving. I think this could get pretty corrective for a while, create that next phase, and then go, so that could take some time. The SP35, rapid, man, honestly. These indices, you could make quite a lot of money if you know how you're trading them. Similar situation, you know, we're in extreme all-time highs right now, so I would say this is where a lot of euphoria is coming in these areas. People are going to try buy it. This could develop, fail, create something a bit deeper, and then continue moving. So I'd be conscious of something like that as well. SW30, not really got anything to say about this. You know, this could still come down, go up. It could do whatever it needs to do. The VIX is just the volatility index based on correlation with the US market. And I think, you know, if we see some extreme volume in the market, we could see another spike. I would say, you know, these areas here, these are the lows. So when price usually comes into these areas, it's a great time to buy. And then you can basically just take the trade back up into those areas. So VIX is an interesting one to trade, especially if you study it really well. And then, yeah, that's basically it. So obviously this is with my Vanguard investment. I got involved here, which is good. That was very strategic. I understood it was on a Monday. And then basically was able to get involved there. And then just before the end of May, which was around about here, I was able to get involved as well. So there was a bit of money put into that area. And then we're basically taking it higher. I think when things like this happen, you can really take advantage of it when you really understand how to trade. Same with these areas, you know, these areas, so many opportunities. But anyway, guys, this covers the indices. Did get through that pretty rapid, so if I did go through it a bit fast and you didn't catch anything that you were looking for, definitely drop a comment and ask me some questions. Be more than happy to get back to you if I missed anything. But yeah, I hope there was a lot of value in this video, and I'll catch you guys in the next one.